Crypto Kids, in 19 hours time, Bitcoin traders will have one of the most controversial CPI data releases within recent history. June data point was 3.5%. Consensus expectation is 3.4%. Cooler inflation. And I disagree with it massively because crude oil prices have rallied by 25% in the same time period. So how can you get lower inflation when crude is higher? So the market shock will have a dramatic impact on prices, in my opinion, and I want to cover that thesis with you here on today's updates video. We wrapped up a Moonshow Daily Crypto live stream where we highlighted the 1 hourly head and shoulder pattern. And my target, since we breached the point of control, which simultaneously is the neckline of the head and shoulder, was placed at 62.7. It builds on the analysis shared on Levex, the Crypto Kids community over on Levex, and it builds on the analysis that I shared this afternoon on Isaac Crypto's channel. If those topics sound interesting to you, well, ladies and gentlemen, make sure to subscribe because we're here every single day. Bear markets, bull markets, it doesn't matter. We're giving you the daily updates, all the bite-sized information, which once you watch a Crypto Kid video, my aim is that you don't need to do anything else in your day. The video should give you everything you need to know about our industry, about macroeconomics, and when it's relevant, politics. If you can destroy the like button as well while you're at it, it would be a huge, huge, huge favor. I thank you in advance, and we can commence with the short-term Bitcoin price analysis. So head and shoulders was one reason for the expected drop. The second reason was the small bear flag that was created. And the third reason goes over macro analysis. We have a downward sloping trend line that stretches from the all-time high in October 2025 up until now. Bitcoin broke above the non-log trend line briefly, was retesting it as support that coincides with the point of control. And the point of control is the head and shoulders as neckline. So 63.9 was just a very, very key level that didn't look like it was going to hold up for much longer. So if that is broken, my understanding is that we reach the next level of key support. Where is that placed? 62.7K. On the volume node, we've been in a consolidation from the first week of June for 2.5 months nearly. And in that area of consolidation, different prices have different demands of buy and sell pressure. 63.9K has the highest demand of buying and selling activity, giving key resistance and key supports. And the second most critical volume node is the 62.7K price line. When you check out candlesticks and candlesticks only, multiple tests have taken place over the course of the past few months, even in February. The capitulation of February 2026 ended at 62.7K. We eventually rebounded by $20,000 after hitting that price level. 2 candlesticks in late February got to our esteemed and prestigious line as well. So if we are looking at the final frontier support line to keep intact any bullish optimism for an extended summer rally, we have to be over 62.7. A daily break below 62.7 results me in closing any scalp long positions that I have for cryptocurrency, such as this very, very small Bitcoin long that I have open purely as a hedge against an extended summer rally. That could take us around the ballpark of the 200 daily moving average, but I aim to close it if we get a daily confirmation below 62.7, begin building on my $500,000 Bitcoin long on the first week of October to the final week of September, and then add the most margin and capital when we breach the log scale bear market resistance that lines up beautifully with the 200-day moving average. So that's my short-term and mid-term thesis about Bitcoin, particularly. Obviously, closing the daily candle underneath the point of control adds to the chances of getting a 62.7K Bitcoin sooner rather than later. How does inflation tie into all of that, TA? Well, consensus, for some reason, I don't understand how, thinks that inflation is going to be below the previous data point release when crude oil prices are 25% higher. You've broken above a falling wedge pattern. How is that feasible? I don't get it. The only reason for, or the biggest contributing reason for the rally from 2.4% CPI to 4.2 and now 3.5 is purely the volatility of crude oil prices. We got a 35% drop in crude oil from May into June, and a 70 basis point reduction was seen on this chart, on this bar chart. With inflation, with crude oil doing the opposite thing by pumping from low to peak 35%, now 25%, the logical next step forward is higher inflation, maybe not 4.2%, but somewhere in the realm of 3.7, 3.8, maybe even 4%. That's my base case. I would be shocked if something else happens. The Strait of Hormuz is blocked. Supply chain globally is getting disrupted. Not only energy is taking a hit, but petroleum derivatives like clothing and different foods and different goods all across the world are rising in value, which adds to inflation. So if we see above 3.5% or 3.5% get maintained, then I think logically Bitcoin should dump. But recently, assets have not been following logic. I'm not taking any trade based off of this news event. It will be interesting to analyze regardless. We know from the Fed board members that if disinflation, meaning high inflation reducing and then de-inflation is negative inflation, that's when things become less expensive instead of appreciating at a lower gradient. If no disinflation, i.e. if CPI is not below 3.5%, the result, the conclusion that must be taken is using the tool of higher interest rates getting introduced starting in September of this year. That's it. If CPI is below 3.5%, then the case for holding rates where they are will remain as the most likely. When you go to CME Fed Watch tool, I mean, it will get updated tomorrow, and that update is what should be the most important thing that we analyze. However, anything below 3.5% will create this 49% rate hike people to jump into, rates staying the same. Anything above or at 3.5% will cause a shift towards a rate hike in September. Kevin Warsh probably doesn't want to hike rates, but he may have no other choice if other Fed members are keen to introduce further restrictive monetary policy. Further restrictive monetary policy in Q4 in the September month lines up beautifully with the narrative of a Q4 capitulation. If money becomes more expensive to borrow and individuals are incentivized to keep the money at the bank instead of investing elsewhere because they get higher interest, well, risk on assets will suffer. Traditional finance will suffer. It's the beautiful, perfect narrative. Tomorrow will be the grand revealer of that data and of how we can treat BTC going into September and October. So stay tuned. I'll cover the exact data release here on the Crypto Kid channel as a video. Anything else that I need to commentate on? Not really. Not really. I think that, guys and girls, is going to be a wrap. If you're looking to trade the volatility, now I don't like to trade news events, but perhaps you do, then make sure to check out the links in the description down below to our exchange partners that make these videos possible. You already know about LoveX, but if you check out the BTCC link, the first thing in the description, then by signing up with your email address and password, if you're eligible, in one business day, you'll be airdropped $1,000 worth of a trade. All the profits you make with this trade will be for yours to keep. So check that out. It's a phenomenal campaign and can help you get started in your trading journey. Link is down below in the description. Thank you everyone for watching. See you all very soon. Take care and bye-bye.